All right. Good morning, everybody. Just wanted to jump back on here real quick. Pre-market prep. Discuss 6865, top of drunken sailor range. So basically, drunken sailor range is a congestion zone of low exposure area that easily pushes price around back and forth, driven by intraday, what we call vol metrics, but basically it's just intraday call versus put speculation by market participants. So quick failure at 68.65, but then we pulled right back down into key level that we were discussing, 68.50, transition areas 45 to 50, and we have a confluence. So this script here, the P-trans level at 68.50 with the orangish, yellowish, is all expiries. So that's taking into account all expiries in the future on our script. And then the 0DT obviously is just a 0DT transition. So if you're intraday scalper or short-term trader, obviously you want to use that script, which you can overlay in TradingView or Thinkorswim. I'm more of a swing trader in a little bit longer time frame. But what I like to look for, I do intraday trade sometimes, but what I like to look for is the confluence of the 0DT script as well as the full expiry script. So that just gives me a greater confidence on a pullback that level is going to be supportive. And then the important key information is if we drop below these levels and I see selling come in from an all expiry and a 0DT standpoint, then that obviously would flip my overall thesis for the day. Not necessarily bearish, but then I would be slightly more cautionary. And as of now, I already got significant information from the open that 68, 65 overhead is going to be important. If we need to see a large amount of call speculation to overcome that out of the money speculation via calls. And you need to, I'll show our vol M command here in just a few minutes when we get the first data run. But if we're not seeing the speculation to the upside, it's going to be difficult for price appreciation, right? Because spot price does not go where speculation is not, right? So we have to have those out of the money calls being opened overhead. I'm opening calls out of the money, whether it's a 20 delta. So my book is getting more positive. That's a positive delta as I'm opening calls, getting long those calls, and the dealer is short those calls. So obviously they're gonna have to buy to hedge that flat, right? Because that's a negative delta in the dealer book, positive delta in my book. And that's just the essence of how it works. So if we do not see that out of the money call speculation, those opening of the calls, then it's going to be difficult for spot price to appreciate via buying or via the SP or speculation of the options market. And then again, if we drop below these levels and then we see out of the money put speculation, that would be like a negative slope on the call and put centroid. And we see puts opening. Obviously, my book is getting more negative because I'm opening long those puts out of the money, whether it's a 20 delta, 30, 40, 50 delta. And then you can see there we're dropping down there. And the dealer book is getting longer, so they have to sell whatever the underlying that they sell, whether it's futures, SPX, individual equities, to hedge their book flat. So that's how the overall market mechanics are working via intraday, market speculation, and that's why it's so vitally important to watch what's happening, understanding where the structure is at in place, because the structure has to be navigated. And why we say that moneyness matters so much, because when you're overcoming these out of the money call levels above and you're adding positive deltas to the book, your positive delta book is just continuing to grow and dealers have to continue to buy. To the downside, conversely, if we're adding negative deltas and we're losing those in the money calls become out of the money, you're flipping those out of the money, and then you're adding out of the money puts are now becoming in the money. You just see the reverse is happening, right? The book is getting negative, more negative, more negative on the trader side. Dealer book's getting more positive and they have to sell. And that creates those, overall waves to the downside. So as of now, 68.65 we discussed was that failure point. As I said this morning, I think I was on another YouTube or on another X post. I said I wasn't seeing a lot of out of the money speculation via the call side, but I thought it was going to be difficult to get above 68.65 at the open. That's probably going to be a failure point. And then to the downside, we're still seeing in the money calls below us, which are supportive. So 68.50 was going to be that level. If we lose 68.50, most likely we'd be looking down towards 68.25 area. So that's the area I'd be watching to the downside. So again, opening range still, we're only 15 minutes in, books clearing. I'd just be patient. But if we start losing these levels here and we see the volume command indicating out of the money put speculation, we definitely could see a little bit more weakness. And then obviously, 6,800 is that significant level below that we've just been chopping around. You go to a 15-minute time frame, and just any TA analysis. And what we like here at Game Edge, I say me as in Game Edge, but our team likes is when we see a confluence of the option structure match like a TA level, right? That just gives you greater confidence of what is happening, because a lot of traders, when they start out, they look at TA analysis, but what we're trying to add is a option structure understanding of it also, that say, hey, if the option structure or the options market continues to grow, which we know it is, and it's the tail that wags the dog, then let's overlay it with TA and whatever else to get a greater confluence and greater confidence and understanding that these levels are supportive. And then if we lose these levels from a TA standpoint or an option structure standpoint, we understand what is happening and why buying is happening, why selling is happening. And hedging, basically intraday, market mechanics of hedging have to continue to occur. It's very mechanical. And once you figure out that the mechanical portion is going to occur no matter what else happens, as price moves up and down, it's, it gives you a greater confidence and understanding of how to navigate these levels and be able to trade these levels. And that's basically what, we're trying to accomplish. And also indicating if the structure is not conducive of moving higher or moving lower, it's conducive of sideways, right? So if it's sideways, then that gives an opportunity to put some sort of option structure on to take advantage of consolidation, right? Theta decay, selling something above or selling something below, because we have good confidence that the market's not going to go there because there's not option speculation either to the downside or to the upside. So that gives you'll see the ICs come into place. You'll see, butterflies, verticals, lots of opportunities to match the structure and the thesis and plan via options and understanding, what can happen. Now, you can do directional, absolutely. And a lot of people do directional within our overall Game Edge ecosystem or community via our tools, because we're able to understand, hey, if we start moving to the downside, we're going to rapidly capture all these negative deltas, and we're actually seeing put speculation to the downside. So, directionally wise, we can move down. So, yep. So anyway, anybody has any questions? Thanks for joining us. I just wanted to get on here this morning, just talk about the market, what I was seeing at the open. Why on our pre-market prep, I was really talking about 68.65. That top of DS was probably going to be difficult to get over. And it's funny because the pre-market, we spiked right into that 68.65. And when I started to see it pull back, and it started failing right away. Again, I don't know what's going to happen with the market, but we have an idea of the structure that's in place even before the news came out, that there was not a lot of out of the money speculation to the upside. For me, most likely what happened is, my thinking is, we had a gap up right into the highest call level at 68.65. Those market participants that were holding calls overnight wanted to get paid for their risk, so they took profit. It's just a psychological component of the market, right? I want to get paid for my risk, so where would I take profit? Well, most likely that right at the top of DS, where all that all that speculation was, where everybody else was, right? So then once one person starts taking profit, we start to see a pullback. You're losing your intrinsic value of those options. And then, it just continues to kind of snowball, right? Which is, I think, is probably what we saw this morning at 68.65. And now we're seeing a pullback 68.50. We're within transition. And we're just, if we get below transition here, I anticipate a little bit more weakness there to the bottom. So, yeah. So, all right. Hopefully that helps everybody. Yes, always had a good if then plan or direction. Yeah, absolutely. I mean, you can have thesis A and thesis B. Sorry, I'm going to talk to our Discord. Good morning, everybody. I'm live on YouTube. If anybody wants to jump on there, I'm just going through some overall components, and I can talk in the Discord also back and forth. So we're just doing them both. If anybody wants to, if anybody responds to me, just remember that you might be live on YouTube also. So, yep. So, Mitra Hedge Fund. Yeah, absolutely. it's always good to have an if then plan for every direction. Yeah. And that's why I was talking about have a thesis A and a thesis B. And that's what I try to lay out every day in my mind. Anyway, I use those key levels. If we're above 68, 65, I see the vol M command speculating to the upside with positive slopes, then I'm most likely going to go long, as well as the MTM indicating that. If we're below transition, we always talk about transition being that sensitivity point between bullish and bearish sentiment and structure, right? So if we're below transition, we're inside of transition right now, and we're actually below 68.50. So that would lead me a little bit more cautionary, not necessarily bearish, but just cautionary. And then if I start seeing what we call dealer adjustment bars. So dealer adjustment bars are basically just large adjustments from dealers to market participants opening or closing contracts, right? So if I start seeing large dealer adjustment bars to the downside, so I'm getting an indication via our market trend model that I'm seeing selling pressure. That's what that indication was there. So, most likely a little bit of selling pressure to start the open here. And if I start seeing that selling pressure continue to pick up with out of the money put speculation, then obviously I would lean a little bit more bearish, right, to the downside. Now, key thing is in a call dominated structure within the money calls below us, pullbacks most likely will be fairly dampened, right? Unless we see a complete change of sentiment and structure today via 0DT. But I would be looking continually to buy pullbacks as long as we stay in a call dominated structure. And I'm seeing positive slopes within the vol M. What happens is everybody sees this pullback this morning to 68.50, the transition level, they immediately get bearish. And then they start putting on directional puts or all these trades, to be extremely bearish. And then it doesn't come to fruition because we actually had significant support below us, right? So right now I'm really at that transition point. If we get below transition, drop down, and then I'd like to see a retest from below transition to see if we fail that point. And that would give me greater confidence that we may have a little bit of weakness. But as of now, structure is still supportive. If the MTM falls apart and we see the out of the money puts come in, then I would flip to a little bit more bearish and cautionary. But as of now, I would look for pullbacks. Even yesterday, significant pullback, right? At the beginning of the day, ran all the way back up to the top. Not saying that's going to happen today, but just kind of watching where we're at within the overall structure. So anyway, hopefully that helps everybody. As I said, very nice short at 68.65 at the top of DS this morning when it failed. That would have been a small amount of risk. If we retook DS, you'd be out very quickly and would have had a short risk window. Obviously, selling pressure continues to come in. So that would have been a great quick trade, and you would have known if you were wrong right away. Again, not condoning that you put on a trade right at the open, but it was a good risk reward level. If you wanted to have a risk reward to short, that would have been the risk reward to short there. And again, as I say, still looking at pullbacks to be supportive. So I'm not bearish. I'm just taking an opportunity of you can short within an overall structure and understanding that it's going to be very short. It's going to be very short-lived on time. So you have to be very quick and advantageous of those quick time frames. So it's easier for me to be long though in a call dominated structure and a pullback to key levels, unless this completely falls apart, this morning. And that's where I'd be looking for. So, but we'll see how it plays out. So. Yeah, so we're just, within transition, we drop below transition. And so everybody wants to get all like jumpy right now, right? I want to see sustained minutes below the transition area, a retest maybe of 68.45, 68.50. And I want to see a failure, a slap your face, hey, this is a failure. We're not going higher from, market participants. So then I look at SPY also. We're at pre-market lows, testing pre-market lows. Qs have pulled back under P-trans. IWM's pulled back to pre-market lows. So this is an important inflection point, at least across the board from a TA and an option structure standpoint. So we'll see how how this plays out here. Thanks everybody for joining us. I just want to jump on here, do some commentary this morning. At the open. If anybody has any questions, want to talk about anything, be happy to chat. So market trend model, filtered cumulative fairly flat, slight downturn here in the bolded white CT, but we'll see. I mean, it's very early. We're only 30 minutes in. New highs still outpacing new lows though, so that's a positive. Let's look at our first vol-am run here. Not going to get a lot of data from this first run just because we're still coming into the opening range. But here we're already seeing a crossed pattern. So this is what we call cross chopsticks. This is basically a consolidation pattern. So quick orientation is this is calls versus puts. And this is the mass of market participants and where they're transacting. So you see the call centroid dropping below 6,900. See the put centroid. Both of these are in opposing slopes. So that's just a consolidation at the moment. Now, this will probably morph into some other state or structure as we continue to get more slices of where the volume is coming in of market participants. So we'll continue to watch that. So here is our interactive volume chart. And so you see a significant drop right at the open of puts and not necessarily, and then you see a rebound of puts coming into the overall structure, not necessarily calls, but again, we'll get lots more info coming. But so right now, this is like a what we call a cross chopsticks or a consolidation pattern. So we'll continue to watch that. So as I talked about, we pulled into transition, and now we're bouncing off that level, which I would anticipate in a call dominated structure, as long as we're maintaining the call dominated structure. And then we'll see how we react around 68.50. So yeah. Well, so again, so that was the thing yesterday is we pulled right back. We were call dominated structure. We pulled right back to a key level that was supportive. Yeah, exactly what I talked about, right? So knee-jerk reaction, everybody sees this and they get bearish very quickly. I want to see how we react to this transition area, right? If we get back above transition, again, pullbacks should be viewed as supportive and getting long and those pullbacks. But what I want to see is a bounce back above transition 68.50, see some consolidation, maybe a sideways action right above 68.50, and then start moving back to the upside. So then I would look for a long up towards DS, right? So now I think some of our advantageous members here in a few minutes, after they get some more vol-am data, would look for some option structures, to take advantage of maybe not going below 6,800 or not going above 68.65, right? Or maybe even 68.25, somewhere around in there. I mean, depending on, where price settles out here. So. Again, if our volume command is indicating cross chopsticks, that would indicate consolidation. So that would not be significantly moving higher. And then we look at this call centroid where it's located at, and this is where the massive market participants are speculating. So it's under 6,900. I could scroll over this and look at, so it's probably roughly 68.75, 68.80. And then down here where it's 68.05, 68.10. So I'm still seeing selling pressure come in though via our market trend model. So that significant rejection off 68.50. So key information so far. So if you were advantageous and looking to take a rejection area, 68.50 would be that rejection area. So SPY there below the pre-market low, still above P-trans though. Qs are below P-trans, so it's a little bit more cautionary. These are just moving averages and VWAP I have on here. Doesn't really matter. So, but again, key level here is this transition area. So, and if you are bearish or thinking bearish or shorting the market, you have a quick out above 68.50, right? Right away that, hey, most likely, again, if you're looking to short the overall market, 68.50 is that key area, right? That right away that you're wrong, and you can just get out very, very quickly. So for me, I would like to have a little bit more information about where we're going. But as of now, this looks a little weak, cautionary, under transition area, under 68.50. Those are those key areas I was looking for. So, but we're within the overall drunken sailor range. down towards 6,800. So could be choppy within this overall level. And then I'd watch COTMP, where out of the money puts go in the money also. That's historically an area where we see some profit taking. So just going to look at the web app real quick here. So still call dominated, spot price right here. And then we see 68.40 on 0 DTE now is at COTMP. But you see all of this charm below us, right? This continues, even though we move down a little less here on the delta, the charm, but you see all the way down towards 6,800. But you see key areas below us that should be supportive or stopping points, right? And then overhead, you see charm levels there that will most likely be headwinds as we continue to move up. 68.65, right at the top of DS, kind of right where we talked about. That would be that area of possible failure or stalling. So the web app, again, makes it very easy to see. I can go in and I can turn the net gamma to bars also very quickly. So we just do bars there very quickly. So you can flip these between bars, numbers. That's key addition to our new web app. So then you see gamma. Obviously, this is kind of the accelerator, if you start moving these through these levels. And what I like to look at is the basically the size, right, of the gamma versus the overhead charm, and which one's winning the battle there, as well as the deltas, right? So that gives me an idea of where the market most likely will stall, where it can go, and how as we move up and down the option structure, how it's being affected by in the money and out of the money as we move up and down the option structure. So. Yeah, so key retest here of transition. We just keep chopping right under it, right? So we'll see how we kind of act or react around that level. So we get some more data on our volume command. So there we go. Continues. So the call centroid slope actually got a little bit more negative. You can see by the numbers over here, and we actually have a rate of change chart that puts centroid. So this is just cross chop 6 pattern now. You see 68.50 where it's kind of all aligned there is important. Let me get an interactive chart here. Sorry. I don't know if I can drag this over yet this early. There we go. So let me zoom in here. So there you see 68.50, 68.60. And you see this down slope of the call centroid and the up slope of the put centroid. So again, this is just a chop consolidation pattern. I'll go back here and cross chopsticks. So we're in consolidation choppy pattern. Now, if this morphs to a negative slope, everything morphs to a negative slope on the call and put centroid, then I'd be looking for more downside towards 6,800. So. But as of now, just indicating choppiness action as we head into the 10 o'clock hour here. After the initial pullback. So let's look at Meta. So Apple pulling back there, COTMP, Alphabet, negative GEX 315, AMD 215, that's P-Trans, Meta pulled right back to COTMC right now. So again, that's a key area that we'll be watching. If we get below that, I'd look down towards 639. Well, that's because of pre-market, that massive run up. So we'd watch that. NVIDIA above transition area. Tesla ran all the way up to 450, which we talked about pre-market. And if we got above 450, we'd be looking for 460. So key area there. If we get back below 450, I'd anticipate maybe it's a little more profit taking, but so good stuff on the Mag 7, still holding well. So yeah, so we're just chopping under transition now, right? So just chopping around back and forth. So all right, anybody has any questions, comments? Be happy to talk this morning. look at our market trend model again. Not really much going on there. Flat. I've had a couple sell pressure indications this morning, but nothing major. So we'll see if that continues to stay the way or pick up. So. All right, just watching the transition area there, everybody in Discord, as well as on YouTube. So we're just chopping around in the transition area. Again, why our key levels matter. We talked about a pullback being supportive, and then chop within the overall drunken sailor range, as well as transition level. So we'll see if we get a recovery. If we get a recovery above 68.50, I'd anticipate 68.65. As long as we're seeing, the volume command as well as the market trend model being supportive of that. So, and if we fail 68.50 again, we could see some more weakness down towards 25-ish area. So. Yeah, I agree on the FOMC. I think we may just be locked within 6,800 to 6,850, 6,860, somewhere around in there. So, yeah, I totally agree. Totally agree. And that's also showing in our tools. We're not seeing a ton of speculation to the upside or a ton of speculation to the downside either. So, basically just stuck in the middle. So, good opportunities for option structure trades, less directional. So. I'm going to update our script real quick, and then it shouldn't move the levels too much. So I usually just do one update. So there's a little more selling pressure coming in. So that's how easy it is to update our Thinkorswim script. So you see those levels go away, and then they'll come back, and they'll be updated. So didn't change much there, as I said. Didn't think it would. So there's some more selling pressure. So we'll see. We're just chopping around transition, everybody. DS. Yeah, very choppy around transition. volume dropping off fairly significantly too there. So at least from the options structure standpoint. So, and here is our new volume run. So again, if you're just joining us, call versus put centroid, green is calls, red is puts. So red is sideways at 6,800. That's where the speculators are basically at. Calls continue to drop though, negative slopes. So that's a little bit more cautionary, but this is what we call a crossed chopsticks pattern. Significant negative slope there on the call centroid, positive slope there. So again, crossed, this is consolidation. 68.50, pretty important there. As you see, price just continues to act and react around that level. And we see speculation, scroll over there, speculation at 76 on the calls, and that will most likely continue to drop. And then speculation for the puts is right at 6,800. So if we want to see a move to the upside, we would need to see that call centroid start picking up the nose, see speculation to the upside above where it's at right now. And then the put centroid needs to come to a more positive slope, also come up under spot price, but not really seeing that at the moment. So. Another chart I like to look at here, this is intraday minute chart. Basically just gives you where the high sensitivity levels are. Sorry, let me get the interactive chart there. Kind of the same areas we went over, right, within our pre-market prep as well as our script. Sorry about that. There we go. So you can see, obviously, scroll over this 68, 65. Again, key area there. And you see all of our levels here. P-Trans 68.50, N-Trans 68.45. And then to the downside, obviously that first stopping area you'd be looking for somewhere around in here at 68.30 if we saw some more selling come in to the overall market. But this is just another visual with spot price overlaid. I think it's pretty cool to look at. So it just really enhances where that where the gamma is and where you might see some overall stalling there. So. Let me know if anybody has any questions. Joining us. Thanks for joining us this morning. I just want to get on, do some morning look at kind of trading and what we're watching here. So just chopping around under that in-trans level, just back and forth. So very choppy action there. So. IWM moving up. Looks like Qs and SPX SPY a little bit weaker than what IWM is. So. So new run our vol M command here. You see significant downtrend now in the call centroid. Put centroid fairly maintained flat. So you're not seeing out of the money put speculation come in, but out of the money call speculation obviously continues to drop. So not significant speculation to the downside, but the upside just continues to kind of slowly move to the downside. So what we'd want to watch for if you're a bull or a bear is this slope continue to the downside speculation. That'd be out of the money puts. If you're a bear and you start seeing that, then obviously we probably have a chance to move to the downside. But as of now, not really much happening there. So. Oh, whoops. So market. There we go. So there we see IWM. There's some buying pressure coming in. So as I said, transition area there, extremely choppy, back and forth. So let's continue to watch that area there. As I said, there was not a lot of out of the money put speculation via our intraday vol metrics there. It was just kind of the call slope just degrading down slightly. So, and when you're not seeing that large out of the money put speculation, most likely you're not going to get a large move to the downside. So that's what's nice about watching this intraday, understanding of what market participants are doing. So IWM pushing right into that plus Gex level. Again, that's usually an area where we'll see some stalling unless we overcome that with out of the money speculation for market participants. So we'll watch that. If we do, that means that obviously out of the money market participants are going to are anticipating significantly higher move in IWM and its components, obviously. So. Yeah, this is why we talk about transition area and being so important. Above, we're bullish. Below, you can be cautionary or slightly bearish. Within transition as well as drunken sailor range. Yeah, absolutely. But within the drunken sailor range, which we still are, it's just extremely choppy. But even within transition, I don't want to say double choppy, but within transition is like extremely choppy, and you can see that's what's happening, right? So I would want a clean break either way, to the upside or to the downside. But right now, it's just market participants are happy just being in the middle there. So, and these low exposure congestion zones are really what we talk about. It's very difficult to trade these areas, right, directionally wise. So you're better off, having some sort of option structure in place. So, and again, that's why we produce these vol-m tools, because this gives you an idea of where market participants are at, or where they're speculating. So if there's not speculation above, then we're probably not going to go up there. So you can sell something above, right? And with the thought that spot price is not going to go there. So same way with below. So, or however you express your trades, whatever. Yeah, 5 minutes, every 5 minutes, or you can run it manually. With the we have it automated for every 5 minutes, but you can run a manual command and update it whenever you like. So, but we tested a lot of slice times. 2 minute slice was too noisy. 5 minutes a good balance between catching the intraday action, but not being so sensitive that you're trying to do knee jerks on every little blip in the overall transactions and volume. So IWM pretty strong. Yeah, so that's key information. When we moved above plus Gex level, it's showing speculation to the upside quite a bit there on IWMs. Yeah, Tesla. We talked about that 450 this morning there on our pre-market prep, where we thought we would see some stalling and profit taking. Obviously, we ran above it, but it's right where we would anticipate us to have sideways action and profit taking and stalling. So. So same thing, came down supportive as I talked about, and then we're right within transition. Now we'll watch that 450 level overhead, and if we get above it, have sustained amount of time above it, we'd be looking for upside. So. No, nobody would have that data because CBOE mandates the updates. I mean, now you can look at the options chain if you want live in your individual broker. As a retail trader, you can look at the options chain. That's, I think, what most people do. But our net OI updates, industry standard is after settlement at 4:30, and then you can update all the trades. Yeah, a lot of services. Obviously, there's a lot of services out there that look at the options chain, look at transactions, and they try to assign tags to them based on the transactions. And that's what a lot of flow data is based on. There's just a lot of assumptions that happen. Not that we're not throwing flow data under the bus, but it's difficult to discern, what's happening just by watching flow data. So. I mean, you can watch time and sales too if you want. I mean, I've never found it advantageous to watch time and sales, but a lot of people do. So Yeah. So 50 continues to be that area, right, that we're rejected at. So. Yeah, just good stuff there on the transition areas. I mean, just fantastic of understanding where those key sensitivity levels are. So, and then I talked about not seeing a significant amount. Okay, so now we're morphing into a more downtrend on the vol M command. So this is interesting here. So we see so we see this put spike in volume. So that's speculation to the downside, right? So again, we ran into 68.50. You see the put spike. Most likely you're going to see some weakness because both these centroids are morphing into a more downtrend look. Again, not bearish, but it's going to be difficult to go above 68.50. And then now obviously we're seeing the resultant pullback now. So yeah. So this is kind of what I talked about is understanding where these levels are at and where you have to get over. And if you see a significant rejection, this is a significant rejection, significant put volume coming into the overall market. So correct. Correct. Yes. They assign tags just like TradeTix or anybody else. Yeah. And if you look at a lot of the cheddar, again, I'm not talking bad about any of the flow services at all, right? But if you see, that's one of the knocks on cheddar, these other services, they just see these large block trades come across and they just throw it out there, right? Without knowing if it's part of a spread or vertical or kind of what the whole option structure is. So yes, we have people that use DOM. We have people that use Bookmap. Correct. So, but on the DOM and Bookmap, if you look at the option structure, most likely there's people stacking trades, 68.50 XPX, right? 68.65. There's people stacking trades at those levels, right? Obviously 0DT intraday. So that's why it's good to understand what the structure is, because the structure has to be navigated. It has to be, whether they go in the money, out of the money, it has to, coming into the day, it's hedged, but all of the intraday volume that comes in is what is going to control price action, right? So understanding where those market participants are transacting is extremely important. And that's what we do. We want to look at the volume of transactions. We don't necessarily care. You can make assumptions, whether they're short, long, by where the strike prices are. But we just want to look at the volume. Where's the volume transacting, right? And is it calls or puts? And that really gives you the best idea of what's happening. So you see right now, significant move down there, and then now we're seeing a bounce back, right? So again, just very choppy within the drunken sailor range is what we talk about also. It's just extremely choppy. So, but yes, you can combine all these. They're mosaic, and that's why we talk about using our trading strategies with overlaying with what your existing strategies are. So yeah. Yeah. So again, what we talked about, it's funny if you look at these levels, you know, SPY, we came right down to the positive transition level, right? SPX, we talked about, I talked about 25, you know, but just so significant move down and then just significant move right back up. So this is telling, I talked about speculation to the downside, right? We have to see sustained speculation to the downside. So. Yeah, well, that's what I was showing on the vol M command there, right? We saw that spike of puts being opened, right? So yeah, So what happens there is I'm opening puts, my book is getting shorter, dealer's book is getting longer, and then they have to hedge that delta. So uh, Paul, one of our founders, came up with that, and he was in the Navy, so he calls it drunken sailor range, where you just chop around those levels. So, and it's low exposure, right? It's just low exposure for dealers, but it's driven by the intraday speculation. So, yeah, and that's why we have a greater confidence if we're above or below DS, because that puts us in a more favorable environment. So yeah, and a lot of times we won't even trade within DS, within the drunken sailor range, unless we have what we feel is a high risk reward trade. So. Yeah, it's just volume's low. It's just everybody's waiting, obviously, for FOMC or a catalyst. We're past earnings, most earnings, right? So there's no catalyst there. There's just no catalyst for the market right now, right? I mean, there's just I don't see any catalyst on the horizon except FOMC, right? So yeah, and then obviously we're early in December. As we get into next week, positioning for the monthly expiry, right? That's usually when we start to, pick up stuff. But as of now, we're just coasting. So yeah, PCE tomorrow, maybe, but PCE CPI really hasn't moved much, hasn't really moved the market much, knee jerks. But, so I don't know what the VIX is at right now, but I anticipate, it's just low volatility. So. Yeah, I don't. Personally, to me, I don't put much weight on the news. For me, it's about market structure, positioning, where market participants are positioning, and the reaction. Right. That's really all I'm looking at. What's the reaction? Do we see call speculation, or do we see put speculation? That tells me all I need to know, because market participants vote with their wallet and the money. Right. So if they're speculating to the upside, it doesn't matter to me what the news is, right? They're speculating to the upside, and they're looking for price appreciation, and they're opening calls, and they're adding positive delta. So I'm honestly, I am agnostic to news. Yes, it moves the market because of psychology and sentiment and positioning, but I can see within the overall option structure where market participants are anticipating or expecting the market to go, the mass of market participants, right? And that includes institutions, right? On our SPXA. That's why I like to look at the SPXA. And wherever institutions think we're going, they have way more processing power, and understanding of whatever the numbers are. So, and those are the big boys and girls. And where they put their money is basically where the market goes, most of the time. So, yeah. I mean, there's lots of other factors under the surface, right, that cause the market to move. I get it. But if the tail wags the dog and we subscribe to that thesis at GE, then that's where the market is most likely going to go, where the massive market participants are speculating. So upside or downside. So that's why we don't really necessarily get a biased approach. We use our tools and the same game plan or trading strategy every day. We look through all of our tools. We look at what the tools are telling us about market structure and on out expiry speculation, and that's how we position ourselves. So, as well as our market trend model. Market trend model keeps you on the right side of the market, understanding if there's buying or selling happening. So, open auction, open market theory. So. Correct. You need call speculation to the upside. Yeah, correct. So staying above this transition area is going to be key, and then looking at the vol-m command and seeing if we have call speculation to the upside is going to be key. So, yep, absolutely. So. Okay, thanks everybody for joining us. Hope everybody liked this trading or looking at the market live this morning at the opening range, obviously heading into 10:30. So we'll see how everything plays out. But again, thanks everybody for joining us, and make it a great day, and we'll see you later.